how I trade the market. Hi, it's Charlie giving you Tuesday/Wednesday's video, and I thought I'd do a slightly longer video today, just going through the core principles of what I do. This isn't a video on an exact strategy that I use and any of that nonsense. I'm not going to go into the some of the actual strategies that I might use. What is more important is knowing when to take a strategy and when to apply it. So I always use the analogy of if you've got a carpenter coming around to your house and they need to put a door on, they're not going to get a paintbrush out to do that job. They might be getting a screwdriver out and such like. So it's about getting the right tool out for the right job. So what I'm actually going to do about how I trade the market, I'm just going to go through a number of principles that I will use before I even get to that point of strategy. Yeah, because a lot of people are just so motivated by strategy and they forget that there's all this other stuff going on. So let me just go through. I'm going to spend 10 or 15 minutes actually running through all of the things that I will use on a weekly basis when analyzing the market, deciding on direction, which side of the market I want to be trading on, and all of everything in between. And then when I am then taking a trade, the trade is then I'm looking to use a strategy which is going in that direction of that overall analysis. So what are some of the core elements that we need to look at? Well, if I bring the pen up, number one, obviously there's TA, so there's technical analysis. Obviously forms a large part of what I do, and what I'm going to do is I'm going to run through actually a lot of the technical analysis that I do. But on a high level, I'm not going to go through every little detail of what I do, but on a high level, I'm going to show you. Everything's on my chart here, in fact. And so I'm going to go through a number of those factors. Number two, a big factor for me is sentiment, and so I'm going to talk to you a little bit about sentiment through this. And then some of you will be surprised by this, I'm going to talk about fundamentals. Now fundamentals, they're not a huge part of what I do, but but of course I'm mindful and I'm watching what news we have out on any one particular week. So therefore, of course, I'm aware of the fundamentals. I'm not basing decisions based on fundamentals, because a lot of the time fundamentals are actually lagging, or the market will shrug off. If the market wants to go up, it'll shrug off a negative news report almost. And so, and we've seen a little bit of that lately. So, but I'll go through a little bit of the fundamentals and maybe some of the things that I'll look at and be aware of when it comes to those as well. So, but mostly it's going to be technical analysis, of course. Now, so we'll start off with the fundamentals. In fact, for me, of course, the first thing you want to do is get a calendar. So most brokers provide an economic calendar for the week ahead. And so it's just, if you're swing trading, economic releases are less important to you. They're not necessarily going to shake you out of your trades. If you're a short-term day trader and you're just about to put a trade on, you haven't realized that in 5 minutes time it's non-farm payroll, then your little intraday stop loss is likely to get taken out. When you're a swing trader, less so. So it's that type of thing is less important to you, but you still need to be aware that, oh, there's non-farm payrolls, or it's FOMC day or whatever. So just get yourself an economic calendar. Like I said, most brokers do it, or you could do something like Forex Factory. Numerous sources for economic calendars. I also use a source. There's numerous sources of news releases and the likes, but I do use this forexlive.com for just especially when I'm in the day trading room. I'm not really watching it every time there's a bit of news comes through, but again, it's a useful source just to see what's generally going on during the course of the day, so you can generally keep an eye on the news. But actually, I do use this as from a sentiment perspective as well, because sometimes you'll see a note that will come out on that, and and I can use that in a contrarian fashion. So it doesn't matter what the news source is, they could be putting something up, and I'll be thinking, it could be a banker said, oh, they're bullish on the dollar, and I might be looking for reasons why I should be bearish, that type of thing. So I'm not using it to any of this to take trades off, God no, but it just keeps you in the loop as to what the general news is, because I can tap into that sentiment as well, with regards to, yeah, okay, they're reporting on various different things during the day, and that can help me as well, from a week to week perspective. So yeah, so from the fundamental perspective, just a little bit of news there, and an economic and just keeping an eye on the economic releases that are going on, because of course you want to be aware if you're trading. I've got up here euro dollar. You're trading euro dollar, and there's a French elections coming up tomorrow. You want to be aware that there's a French elections coming up tomorrow, because that type of thing is more likely to create a gap in price. So of course those sorts of things are interesting. Now, moving on, from a sentiment perspective, I've already hinted actually just using a news feed to help me with measuring sentiment, because a lot of the news sort of sources out there, and that's just one, but they're reporting on what banks are saying, what analysts are saying, what the news is, so to speak, what the fundamentals are, and quite often you can tap into their own biases as well, and so because everyone has a bias, and so what I'm looking for is what's the general analysts sort of sentiment out there, and if analysts are thinking have a view on one direction, so to speak, whether it be with the dollar or with equities or whatever, then sometimes you've got to be looking at, well, what's the counter view to that? What's the counter argument? So I will tap into sites like that, but not to go with what they're saying, but to formulate my own view and say, hold on a second, there's actually, we got a good example is actually this euro dollar's been going up, as we can see, since the end of March, and yet a lot of analysts out there have been constantly the whole way up looking for reasons why when the dollar's going to come back in and strengthen again, because they're using fundamentals and they're thinking that inflation's coming and that whole story there, which it may well be, but look what actually has been going on with price. So quite often you can tap into that, and I use Twitter for that reason as well. So I follow a number of different people on Twitter, but only because quite often I'm trying to tap into a broad cross-section of analysts out there, just so that I can actually see what their biases are, so that I can actually use that as well. Plus I'm using sites that give me what retail positioning is doing. Again, we know that retail have been short through all of this, because that's what they do. Market goes up and retail starts shorting. So I'll of course use that, and commitment of traders. So I'm not sitting there rifling through the commitment of traders report. No need. Just at the end of the week, you normally get a review, and all I need is an overall review of what are the speculators doing. Are they increasing their dollar positions, or are they decreasing them? So simple stuff, but it all adds up, you see. So and then we're coming to and so that's where I'm really trying to tap in from a psychological perspective as to what's going on around the world, what are a lot of traders doing, what are the big speculators, the hedge funds doing, versus what are the retail traders doing, versus what are the people who write on Bloomberg, CNBC, what sort of articles are they writing as well, because then that can help me with my bigger picture views. Now, if you're just a day trader, a lot of that is of less importance, because you're just trading, very short term patterns. So what I'm doing is more for my swing trading. Okay, so. And then if we come to the to the technicals, and I'm just going to go through my charts a little bit here, just to give you a little bit of an idea of what I'm actually doing. Firstly, I'm actually going to tell you what I use on this chart. So I've got an MACD down here. Okay, so I'll go through a little bit of what that is. That's a standard setting. So default setting 12, 26 and 9 is what your standard setting would be when if you put a MACD on a chart. That's all I have it set to. Then I've got a load of moving averages here. My standard moving averages, I'll start from the blue one up. The blue one is a 20 period moving average. Of course you can use a 21. I used to use a 21 years ago. Doesn't really make much difference. So anyway, I have it on a 20. I have a 20. I have a 50. I use a 100, which is my green. My 50 is my black. I have my yellow one or gold is a 200, and then occasionally, it's not even on this chart, you'll occasionally see a red, slow moving red one, and that's a 500. All of these I use as simple. I'm not interested in exponential moving averages. Some of you will be. I'm not interested, so it's not how I use them. I want them to be slower to react. I'm not interested in moving averages which curve over quickly because the prices move. I don't want all of that. I'm not using moving averages for crossovers. You know, I'm using moving averages for directional, the position they're in, what's the angle at, how far is price away from a moving average. All of these factors are coming in, and if price is moving back towards a moving average, then obviously that could be like a mean reversion type thing. So I'm not interested in exponential, and there are also reasons why that sometimes price might come below. Let's take this as an example down here. Price comes down below a key moving average, but the key moving average is still facing up, and sometimes the moving average won't be facing up if you're using exponential. So that's one of the key reasons why I like using simples. So, and then I'm actually going to just tell you what the other short-term ones are. I've got two on here. Again, I do find them quite useful. I'm not using them all the time, but they are useful. I have a 5 period here, my red, and an 8, which is my yellowy orange one. So I've got a 5 and an 8. And I do use those for crossovers. I like to see how they're reacting with price. So again, like back down here on the euro dollar, they crossed here, and my momentum here on my MACD had accelerated to the upside at that point. So I was looking for a dip on that day, on the 6th of April, in fact, to get long, because everything's crossed up to the upside. 5 and the 8 have crossed the upside. I'm looking for a little dip to then get long, because I've got that early stage rising momentum at that point as well. So so I do quite like using those. And then a lot of you seem to figure it out anyway, so I'm just going to tell you what I call my bands. My bands are 2 5 EMAs. Okay, that's all they are. It's 2, and that's the only EMAs that I do use. So there are 5 EMA. One is, but they're not set to the closing price. Normally when you put a moving average on your chart, they're set to the closing price, but one of them is set to the high. You have it set to the high price, and the other one I have set to the low price. And by doing that, I create these two bands, I call them. Over the years, I get people saying, "Oh, are you using Bollinger Bands?" No, they're not Bollinger Bands. They're just 2 moving averages. And the nice thing is they sort of course, they're short term and they follow price. When price is going up, I'm looking at how price is reacting. If it's on the outside of the upper band, so to speak, it's telling me it's strong. And then there will be times when it'll pull back to the lower band, and that can sometimes, I can use that as an entry. There are certain criteria I will use with when I'm going to use a pullback to my lower band. And likewise, when price is going down, then I'm looking for pullbacks when it comes to my upper band. And so, but again, it's all about context. Like I say, it's not just go off and do that. If you went off and did that, you'd probably just lose money, unless you've got enough rules in place. So I'm just telling you some of the tools that I use, but it's how you go about using them, which makes a difference, of course. So that's what I've got on my chart there. Then what am I doing? One of the biggest things that I do is multiple time frame analysis. I've gone on and on about this for years now. For me, that is my edge. The moving averages, the trend lines you see, looking at price action, whether you're making, what price is actually doing, is it made a higher low or whatever. All of that pales into insignificance. It really doesn't matter. I've got all these moving averages on my chart. I could have a load of Fibonacci retracement levels. It really doesn't matter. It's about how you apply yourself. I remember Mark Douglas, the late Mark Douglas, who wrote Trading the Zone. Kim and I met him 20 odd years ago, and I remember him saying something like, if you locked a trader in a prison cell for 6 months and you only gave him a 10-period moving average, and that's all he had, on a live chart, probably within that 6 months he'd figure out a profitable way of trading with that. And what he was trying to say at the time was that it doesn't really matter what the tool is that you have. If you focus on it enough, you'll find a way to be profitable. I hear so many people say, oh, this indicator or that indicator is lagging. And I have to laugh, because people that say that don't understand the markets, or either that, or they're just saying it because it's not what they use. And so things like moving average, yeah, moving averages are lagging. But you don't use moving averages as crossovers for buying and selling. But that's what people a lot of the time mean when they're talking about that. Even things like MACD. Oh, MACD is lagging. It's telling you what price has already done. They obviously don't understand how to properly use an MACD. And so, because yes, if you're just purely looking at the histogram bars or the signal lines here, then there's certainly plenty of times when they're lagging. But MACD can be used in different ways. It can be used for divergences, hidden divergences as well. So it really, and then really they are forward looking in many ways. But anyway, so multiple time frame analysis. So going up my time frames, even if I'm looking at an intraday setup, then off a, dare I say it, a 5-minute chart these days. And it's funny how I've evolved as a trader over the years. I will trade off a 5-minute chart if I'm using that as my excuse to get in. If I'm using that as my excuse to get into a trade. But I won't necessarily, but it was only if there's something going on the hourly chart and the 4-hourly chart and possibly even the daily chart. So even when I'm doing short-term trading, I'm still going up the timescales. Now, if I'm swing trading off let's say a daily chart, then I'm looking at what's going on the weekly chart and the monthly chart and even the quarterly chart, and I will even go out to the yearly chart. There's not always a huge amount of data on the yearly, but I'll certainly go and have a look at it. So multiple time frame analysis is really important to me. What's going on in those higher time frames? Because a lot of the time it's noise which is going on the smaller time frame. If you really go out to the bigger time frame, if you can get a gauge of the bigger time frame and where you think that market's going to go, then you can then just trade that direction. Okay, so I traded that direction since early part of last year, really, since first lockdown, or just after, or during actually, so it was just after the pandemic started is what I mean. So about, I don't know, early May last year, started trading the euro on that long side. Now I had a view there, and I think another thing to say, it doesn't matter what your view is. It doesn't matter. Forget about being right. I'm still only right 40 to 50% of the time. Yes, there's going to be little clusters where I'll have a little stronger run of winners, of course. But overall, I'm right somewhere between 40 and 50% of the time. So it's not about being right. It's just about, when I am right, how I can manage to profit and make a bigger profit from the times I am right. And that's really the name of the game. Okay, so I'll take those multiple time frame analysis, and so again, it doesn't matter whether my view's bullish or bearish. It really doesn't matter. It's just about, if I've got a bullish view and I get into a position, that I will run that trade, try and find good risk reward opportunities within it to my logical targets that I found within that analysis. So if I can give any advice, it would be to use multiple time frames. Even if you're trading off of smaller time frames, it's really useful to just go out to your hourly charts, even if you're trading off of 2-minute charts sort of thing, and just see, well, I've got this 2-minute pattern that I might be trading, but what's going on the hourly and so forth. So the biggest part of what I do is that multiple time frame analysis, and that's what I'm doing with our swing traders every Monday night when I'm doing my sessions with them, is going through the various different time frames. But a lot of my work will be when I'm coming in here on a Saturday or a Sunday, and I come and go from my office all of the time. I don't ever switch off. The weekends, I'm thinking about the markets. This weekend, there's a great example actually just gone, because I'm constantly thinking about my positions, about where I might be, adding to positions or where I might be trimming them, depending on what might be going on. So I'm constantly trying to think ahead, a bit like a snooker player would always think 3 or 4 shots ahead. I'm constantly mapping out, what if this happens in the market? What if that happens in the market? How will I need to react if this happens or that happens? So I'm constantly going through all that, and the more you repeat that exercise, the better you are prepared for when that thing might happen in the market. Because if you don't, and you're just sitting on a trade thinking, I hope it gets to my target, I hope it gets to my target, you're then sort of burying your head and just worrying about the outcome of the trade. The outcome of a trade is, in many regards, here nor there. What your job is to do is to manage your risk, and the trades that you're in which are still on their, let's say, on their way to target, that you manage them well. And that is there anything else you can do, like adding into your positions along the way as well? Because that's a big thing that I do. So I'll add into positions along the way. So these are some of the core concepts of what I'm doing. You can see that I show these charts every week. I do use trend lines. As you can see, I've got trend lines on different time frames here, because I've got this trend line here on this daily chart. And if I take this out to a weekly chart, you can see I've got this bigger channel that's in place here on the weekly, and then I've got some old horizontal what were support and resistance lines going all the way back. There you go, they're going all the way back. So I leave those on my charts as well. And for some of you, you'll say, oh my God, Charlie, your chart's really busy. Yeah, but remember, it's a bit like the Matrix. I see through all the moving averages. I see them, they're there, but I'm looking at the price as well. I'm looking at where price is compared to what it was doing over here and what it's doing up here. So all of this is coming into play. What's price doing when it came down to my 50-day moving average at that point, 50-week moving average at that point? Funnily enough, there was some DST set up. So that's a classic example of whereby, when prices come down to a key level, which is a weekly 50 in this lower trend area, channel line down here, key levels down there, then I'll go down to smaller time frames and I find a DST setup. And then I start to add to that position back then. So multiple time frame analysis, always, and I am still looking at the price and what's price doing to what it was doing in the past and all of that, because people just assume, oh, you're just using moving averages. No, you're still looking at where price is and if it's making higher highs and lows. And here's a good example. If I go back out to the monthly chart, that we made that last low in the euro dollar back in, I think it was January 2017. Yeah, first week of 2017 was the lowest it's been. We tested back in last year in 2020, in March of 2020. So we've so far not made a lower low there. We haven't made a higher higher yet. We've made a so-called a higher low, but that's not really a higher low unless this high gets taken out, is it? So, but certainly all of that stuff you have to read. I read the relationship of price to these key moving averages. This whole period for these couple of years from 2018 to 20 was what I call hand railing. It's another method thing that I use in relation to price and a moving average. So there's a lot of stuff that I'm taking on board. So I've got sentiment, I've got a bit of fundamentals, keep being aware of what's going on. I know what the central banks are doing around the world and the interplay between what one economy is doing and its inflation figures, which is obviously all key at the moment, and consumer spending and sentiment in that regard. But in the main, it's right, okay, what's the sentiment? what's the sentiment with regard to a particular market that I might be trading, and then taking that in line with the technical analysis and building that picture from a top-down level with the technical analysis to then say, right, I now have a view on this market. I have an area where I'd like to start accumulating a position, and I have areas where I would be wanting to bank profits. And somewhere in between, I'll accumulate positions. I might get to add to those positions, and then there'll be levels where I'll say, right, enough's enough. And along the way, there'll be some hiccups, no doubt, because there always is. The market always likes to throw a curveball at you, no matter what side of the market that you're in. So there you go. So it's I know it's very high level still, but I've really gone through some of the main concepts that I use, my chart setup. But again, it's how you go about using, whether it's support lines, trend lines, or whatever. And it doesn't really matter what your method is. It really doesn't matter. People get really funny about, oh, you've got to use this method or that method. It doesn't matter. The main point in trading is that you have a view, that you can use something, whatever your view or technique is, or technical analysis is, whatever it is that you use to take a view on a market, that you can then make money from that view. Now, you're either going to make money from two ways: from having a higher win rate but with a lower risk to reward ratio, or probably a lower win rate with a higher risk to reward ratio. Normally that's the way that it's going to work. So then all your job is to manage risk, and ensure that when you're in those winners, that you can just make the right decisions on when to exit, and you can use back testing and all of that to help you with that type of thing. But all of your job is to be that money manager and say, right, I've got a view, and whether that view is based on a technical indicator or whatever it might be, or pattern or whatever, you take a view, trade the view, and try and stay with that view until you hit your logical targets. And if you can do that enough times and accept that you're going to be wrong a given percentage of the time, don't worry about being wrong. Think about the next 1,000 trades that you're going to be taking, and it doesn't matter if out of those 1,000 trades you're wrong on 500 trades, does it really? If you're making more money on the 500 that you are winning on. That's it. That's the game. Long one today, folks. Most of you probably won't get to the end of this, but do give us a thumbs up if you enjoy this video, and always remember to subscribe for future videos as well. If anything you want to discuss, by all means do so in the bottom. But like I said, it doesn't matter what your method is. It's just about how you go about making money from the markets. Take care for now. I'll see you on Friday.